So well. All right. I think it's working. Okay. So far, so good. Um, let me just check one more thing and we'll get started on today's video while this is loading up. Uh, if you don't know who I am, my name is Aaron Bowman. I'm a realtor with eXp Realty, and I have a team over there called the Bowman Realty Group. And on these videos, we try to do every Tuesday. We call them our Tactical Tuesdays. And what we try to do is bring you tips and information as far as what's going on in the market. If you're looking to buy and sell, invest, what have you. And today we're talking about a couple different things. And the first thing here, if I can pull it up, is what to avoid after applying for a mortgage. So we work with a lot of buyers, and one of the big things that we try to tell people is when you're getting a loan, that's really one of the bigger important parts during the step. Finding the house and everything, that's all fun. Getting through the inspections, that's always a tricky situation. But once you apply for a mortgage, that's really where you have to pay attention to a few things. So here's our top 7, and there should be a link down below wherever you're watching this from if you want to read the blog post. But something in my eye there. But basically, these are things you should avoid after getting a loan. So once you get approved and your loan officer, your lender says, hey, listen, here's the stamp of approval, you're pre-approved for X amount of dollars, do not go out and buy anything else or change it. And these are the things we're going to talk about. So the first one is don't change jobs or the way you are paid. The biggest thing with a lender is they want to make sure that they are seeing a consistency. Money comes in, money goes out, bills are being paid. You've been at the same employer for a long period of time. Now, they don't want to see that, hey, I've been with X employer when I applied for this loan for the last 8 years. And, I was working at I don't know, some store, and now today you want to open up your own bakery. If you're self-employed, they want to make sure you're seeing that money coming in for the self-employed person into one account and getting your withdrawal, your pay off that. So make sure you keep things very consistent. Number 2 is you don't want to deposit cash into your bank account. So getting monthly paychecks or weekly or bi-weekly or however you're getting paid is fine. What they don't want to see is a large lump sum, say, as small as $500. That's a little drastic, but they don't want to see a lump sum of, let's say you had an inheritance. Somebody passed away, you got some money. They don't want to see all of a sudden a big chunk of money in there, say 10 grand deposited into your checking account. It can be done as long as it's explainable of where the money came from, but what they want to avoid is anybody giving you money to purchase a house and then having to pay that person back. So if mom and dad, recently got married, maybe you just moved out, they want to help you out, whatever your scenario is, if they gave you, say, $10,000 as a gift, you're going to have a memo or a note or something going along with that that's notarized saying that this was a gift and it doesn't have to be paid back. But to make it easier on yourself, just don't deposit any more money into any of your accounts that isn't coming in from your W-2 paycheck, or if you're self-employed, through however you make your money with your jobs. Now, number 3 is number 3 through 7 kind of all tying together, and it's credit related. So number 3 is you don't want to make any large purchases like a new car or furniture for your home. The reason being is there's something that's called, I'm sure this was explained to you if you're in the process of buying a house, is a debt to ratio income. And that's what the lender looks at. They want to see how much money's coming in, how much debt is you have, how much money is going out, and what's left over for essentials. So if you are all excited, you found your house, you got this new living room, you want to get rid of the old sofa from your college years or whatever the situation might be, and you want to get a new furniture set up, the worst thing you could do is go out and pay a couple grand for new furniture, and then because they're going to rerun your credit and everything right before they close, it has to be within so many days. If they do that and your trade lines have changed on your credit report, now all of a sudden that monthly payment of $300 wasn't there before, and now it is, or whatever the case may be, 50, 60 bucks monthly payment, that's going to offset your debt to ratio income, and it could basically throw your loan out off balance, and you may not even get approved to purchase the property. And that's definitely something you don't want to have happen after searching through houses, having your home inspections done, all that stuff, getting the utilities, getting ready to be turned on because you're going to be closing in a week and all that stuff. You want to make sure that you don't do anything to jeopardize your loan, because if you can't pay for the place, that kind of sucks. Number three, that was number three. Number four is don't co-sign for loans for anyone. I mean, first of all, that's just good advice, because if you have to co-sign somebody for a loan, more than likely, unless they've had some issue like divorce, or maybe they were sick and they were out of work and they couldn't pay their bills, if you have to co-sign for somebody, more likely the fact is they just don't know how to manage their money, and that's probably just putting you in a bad situation to do that anyways. Number five is you don't want to change bank accounts. Again, consistency is key here with lenders. They want to see a consistent, established pattern, creature or habit type stuff. You bring a check or a direct deposit every month into your local bank. You want to make sure that money's going in there. You don't want to change banks midstream just because you might be getting a little bit, 1/8 of a tenth of a 1/4% back. My battery's going to die on my camera now because I've been having some issues with technical stuff. So we're going to get through this quick. Number four is don't apply for new credit. Again, you don't want to change anything in your credit report, and you don't want to close any credit accounts because that could in turn then drop your credit score. So with that being said, credit being very important, the next thing I want to share with you is a company that we work with now called ACN. I plan on doing a bigger video on this, but the one thing I want to share with you is the identity theft. It's very important, especially with the Equifax breach in 2018. You can go to their website, you can check it out. I've had it happen to me, identity theft. And if your information's out there, you want to be protected, especially if you're thinking of buying a home or in the process of it. The last thing you want to do is have somebody run up a bunch of bills in your name and not have the ID protection out there to where they're going to combat it for you and fight it where you don't have to be tied up doing it. So this is the ID seal. It's through a company, the America Communication Network, or ACN, and it's somebody that I've partnered with and started a side business with, and it's really great. I'm in it. I've put a lot of my services over to it, and just because my camera battery is going to die, I can't believe this is happening right now, I will go further into this. The links are going to be down below. If you are thinking of buying a house or you just want to be protected, check this out. We can also help you